So welcome to the webinar for the one-year anniversary of ProPicks AI, Investing.com's AI-powered solution that's been saving retail investors hundreds of hours, not to mention thousands of dollars, when choosing the best stocks to buy. I'm Thomas Monteiro, Investing.com's global analysis lead, and I'll be your host today as we discuss the present and future of financial data modeling. Joining me is Andy Pai, the visionary behind ProPicks AI and VP of subscriptions at Investing.com. Hey, Andy, thanks for joining us today.
Hey, Thomas. Thanks for having me on.
Thanks. Hey, what a year this has been, right? I mean, between the S&P gaining more than 40% since November till today, which is crazy, even by post-GFC standards, and all the exciting innovation that has hit the market since, I mean, I really couldn't think of a better time to be a stock market investor. Where I would like to kick things off, first of all, is, Andy, from your perspective, from the product side, from the creator's perspective, and pardon me for throwing a bit of a knuckleball there, what would you consider to be ProPicks' greatest advantage?
All right. Well, thanks for starting with the easy ones. I think the essence of that question is really about what is our unfair advantage. Is that reasonable?
Yeah, exactly. That's a good way to answer it.
Okay, cool. So I think the real unfair advantage that ProPicks has is that it's built on the back of years of R&D that went into building Investing.com itself. So Investing was founded in 2007, and over time, we've built a brand around bringing really sophisticated, high-quality data feeds to mom-and-pop investors, retail investors, and traders like us, right? And so when we're starting to build ProPicks, having access to all those data feeds and 25 plus years of data at our disposal to build something with was obviously a huge, huge unfair advantage.
Okay, yeah, so, since you did so well on that first question, let me stick to the easy ones. And I know our marketing team may hate me for this, by the way, but, how much of this is actual AI and how much is just, buzzword bingo?
Well, from a product perspective, honestly, I don't care if you call it AI, ML, an advanced calculator. What matters most is that it works, right? And so some of the techniques that we're using really leverages some of the advances in representation learning or deep learning. But we use them not because they're trendy, they just happen to be really useful at solving some of the problems that we had when we were building ProPicks AI. And so it's kind of funny, actually. Look, we've been using ML for a good part of the last decade, and suddenly everyone started calling AI, started calling it AI. I guess it's magical enough now to deserve that title, but honestly, don't care what we call it. Ultimately, what matters is that it delivers results.
Love that take, actually. Let's stick with that a little more. Can you show me how ProPicks works under the hood, like no bells and whistles, just straight up how it works?
Yeah. So how about we do this? Let me break it down to 3 levels, starting with the basics, and then we'll use that as the foundation to build up from there.
Yeah, sounds good. Let's do it.
Okay. So at its core, what we're trying to answer is the same question that every investor looking at any stock is trying to answer. Is this a good company? Am I going to make money if I buy this stock, or am I going to lose money? And the advantage we have with machines is that we can train them on this 25 years plus of data that we have available. And so that it doesn't have to make the same mistakes an analyst has to make while they're building up their career and sort of decades of experience to understand and make all those costly lessons. And so giving this system a big advantage in that realm has been super effective. And what we've discovered is that the more variety of data that we provide, so the more examples we provide of good companies, mediocre companies, and bad companies, the better the system seems to get.
Right. So that implies we need to teach the AI how to learn, actually, right? So can you walk us through how that process works? Like, what makes a good stock?
Yeah, so this is a really interesting question. So actually, in the premise of the question itself is another question. So sorry if I clarify that a bit. But what even does it mean to be a good stock? And that's one of the first questions that we had to answer when building the model. So when we define good, it also has to be something that is actually predictable. So let me give you an example. So everyone would love to know tomorrow's stock price today. But trying to predict that sort of exact short-term price movement is largely an intractable problem, at least for the data sets that we have access to. So while tomorrow's exact price might be outside the capacity or sort of the capability of the solution space of our ML models, um, by looking at longer time frames and getting a little bit more creative with how we actually measure success, like using risk adjusted returns or relative performance, we found patterns that are much more predictable. And so, to use a weather analogy, we may not be able to tell you exactly how many raindrops are going to fall tomorrow. We can tell you regions in your area where it's worth bringing an umbrella.
Love that answer. By the way, so now that we have a working model that can predict which stocks are good and which stocks are bad, how do we turn those into ProPicks? Is that another step to it?
Yeah, that's a huge piece of this. So having a probability distribution over the outcomes of each stock is certainly helpful. But what we also need is to put that to work somehow, right? So we need to run these predictions through multiple layers of validation. One of the tools we use is called backtesting. So not only do we backtest on models, backtest the model on data that the model has seen, but also on a set of data that the model has never seen. And so that helps us build a little bit more confidence on has the model actually learned something and is it generalizing out of distribution, right? So that's one technique. But honestly, there's so much that goes into building these lists that I could spend about 24 hours worth talking about it. And I know the marketing team is already like, I can imagine their voice in my head telling me I'm getting too nerdy. So let's save that for another chat.
Yeah, well, I love where this is going, actually, but let's do this. Can you bring it home with a concrete example of like how this works? Like walking us through like one of our top 10 picks of the year.
Yeah, one great example that really illuminated the value of ProPicks to me personally was Vistra Energy. So to be candid, I don't follow the energy market very closely at all. So what makes Vistra interesting as a case study to me is that ProPicks is able to surface companies in sectors that don't deeply align with my day-to-day interests, and but that shouldn't preclude them from being great companies that I can potentially invest in, right? So having a tool like ProPicks AI brings those types of companies to the surface that otherwise may be totally off my radar. Let's look at specifically Vistra Energy. When we look at the metrics, so it already had exceptional 3 month momentum. It was up something like 50% plus. The cash flow margins that the company had are north of 35%, which is really good for the sector. And then what ProPicks seem to have found is that from a relative valuation basis, it was still only trading at about 7.5 times EV/EBITDA. And so still the model felt that it had a lot of room to run. And that's where, these types of analyses, these types of models can be so effective.
Right. That's a great explanation. And it actually brings us to the next topic I'd like to discuss more thoroughly, which is our top 10 picks of the year. I mean, if you're a heavy Investing.com investor, I know you've seen this, but we've been conducting a series of articles on our top 10 picks of the year, right? We'll soon review pick number one of the year, by the way, so stay tuned. But for now, let's focus on picks 10 through 2. Um, while conducting research to write these articles, the one thing that stood out to me the most wasn't exactly what you were mentioning about Vistra, like finding new stocks in different sectors, or even like finding stocks in different risk return propositions in comparison to what I'm used to doing myself, or what users are used to doing themselves, right? Um, what I felt was more interesting was just the sheer variety of signals that the DI had picked up on. Like for instance, if we look at picks 7 and 8, IDEX Labs and Williams Sonoma, those picks they were spotted right before they broke above the long term resistance pattern. And then you look at a stock like such as Vistra, for example, as you mentioned, or Nvidia, you're going to see a whole different scenario. I mean, these stocks were coming up ahead with lots of bullish momentum when the AI picked up on them and saw that they had further room to grow. I mean, for Nvidia, it actually gained another 178% after the AI picked it and after it was growing already. So can you walk us through like how that process works? Like, how does it, pick stocks? Why does it picks up on so many different signals?
Yeah, NVIDIA is an interesting case study as well for me personally, because when something soars up that quickly, as Nvidia had already done by the time we launched ProPicks AI, my inner contrarian starts to question, hey, is there a real element of irrational exuberance here at play? And I could see why an AI model would pick a company like Nvidia, right? So kind of the textbook example of what a great company is it's a company that's growing fast at really high profit margins, and it's able to do that at scale. And so obviously Nvidia checked all three of those boxes. So I was like, okay, makes sense. ProPicks likes this, but it's probably already priced in, right? But nevertheless, since it was on the ProPicks AI list, I gave it a closer look, and that's when I noticed that the fundamentals, even beyond the numbers, are actually quite good for this company, which I was able to figure out using a lot of the other tools that Investing.com has to offer. And then you sort of uncover that, hey, this company has a near monopoly position. It's especially it's pretty much the only player in town for data centers that are trying to do training runs. The quality of customers are like some of the most iconic brand name customers that you can have. And it's able to do all this while operating at 60% plus gross profit margins, right? So that's when I started understanding, or started becoming a believer in Nvidia as well.
Right. So what you're saying is that it picked up on the fundamentals, which were good despite, the valuation, the high valuation and everything else. And this is really interesting because I feel like it applies to the next talk I want to talk about, which is actually our number one pick of the year. So drum rolls, please, first of all. And it's none other than SMCI, supermarket computer, which has been in the news lately and maybe not for the best reasons. But, looking in retrospect, I mean, our users notched a massive return when we picked the stock back in January, right? And I think the more interesting part to it, I mean, apart from what you're saying about valuations and fundamentals and et cetera, I think the more interesting part of this whole equation is that I actually decided to sell it in July. And this is really interesting because I wouldn't have sold it myself, right? I mean, it's really hard to just give away, something that's giving you so much money, right? There's kid stories about this. So anyway, can you explain why DI decided to sell it at that point?
This is a really interesting one, especially because I remember at the time our customers and even team members internally were asking actually a very similar question, like what happened with SMCI, like how come it got dropped from the list? And so we decided to do a manual reconciliation just in a spreadsheet of trying to better understand the model rationale. And the conclusion that we came up with is that there were just other companies that offered a better risk reward profile. And SMCI, even though it had a really high pro score as well, just ended up dropping out of that ranked list of 15 companies that are in Tech Titans.
So that's a great explanation. I mean, I would have sold the company myself just because I was making so much money off of it. I mean, it would be really hard to sell that company. And that's another point where the AI can be really helpful, right? It can, doesn't have any emotions attached to it. So that's really important, I think. I actually talked to a user, on that topic. I actually talked to a user recently who told me that she uses ProPicks only to spot like stocks that only to kind of compare the stocks that had become sales for the month according to the AI and compare those against her portfolio to see whether she was holding something that needed to be removed from her portfolio, so not just the list. And that's a fantastic example of how people start using it, in different ways from which we had originally envisioned, right? How do you feel about that?
Yeah, I can tell you that that's why I love building products. I can tell you that's not the case that I thought of when we were imagining all the use cases for ProPicks, but I can see how it can be useful in that way as well, right? I would say the most common way that I hear users using ProPicks is really as an idea generator to give them fresh takes on things that are interesting in the market that month. So it might be that the user is really interested in tracking the movements of famous investors like Warren Buffett. Well, we have a ProPick strategy based around that. It might be that they work in the tech sector and they feel they know a lot about it, and so want to focus more of their portfolio on those types of picks instead. Our goal really is to provide plenty of choices and then have the user decide which ones they find most interesting. Once they find a portfolio that they really connect with, then we offer a broad range of tools, as you know, whether that's like historical financials, real-time news, all sorts of really anything that you would want to know about the company, we really strive to provide on the platform itself. So having all of that information at the fingertips is another big part of what makes ProPicks such a useful tool for our users.
Right. Great. So now that we've shown what ProPicks AI can do, I mean, let's get to the how. And I know our users would love to hear a little more about how everything came to fruition. And for instance, let's do a little exercise here. Say I'm a user and I want to build my own model, like my AI model. What would it take for me to get to where we are here?
Well, first off, we're hiring, right? So if you're passionate about machine learning and finance, I'd love to talk to you. But my recruiting pitch aside, I don't want to overstate what we've done on the algorithm side or the compute front either, right? So the basic recipe is an open secret. There are really three ingredients. There's the algorithm, there is the compute power, and then there's the data. So on the algorithms, most of those are published in academic papers, and there's implementations available online. The compute part, there's plenty of cloud providers now, whether that's Google, AWS, that make all that accessible. And Google Vertex AI has been a really fantastic partner for us on the training and inference workloads that we need for ProPicks. But as any good analyst will tell you, data is really the star ingredient here. So algorithms get all the attention because they are the recipe. But as one of my favorite chefs likes to say, real food is ingredients. And that's really how we think about ProPicks as well. Data is really the star ingredient, and we spend a lot of effort making sure we have really interesting, high-quality data feeds that are also QA'd really well.
Right. And is that how Investing.com's massive data infrastructure helps you build a product? I mean, does it give you all the necessary ingredients?
Right, exactly. So that's where scale really matters. Investing licenses something like over $4 million of data annually from all these different providers. We also spend about $4 million or so on compute across all of our various services, but just having that at our disposal when you're going to build something like ProPicks is really invaluable. And then on top of that, we then have hundreds of man hours a year, maybe even thousands, spent on just the QA processes that go into making sure that the data quality is really high. Because if you give the model bad data, you're going to get bad results, right? And so we have teams dedicated to ensuring that that's the case. And then we're also constantly refining our ML models, looking at what's out in the market in terms of new techniques to improve model performance and porting those over into our models as well. So
Right.
the reality is, right, most investors just don't have the time, resources, or frankly, even the desire to do all this heavy lifting. And from Investing.com's perspective, they really shouldn't have to. Like, our goal is to package all of this stuff up and sell it to them at an affordable subscription price. And so as the user base grows, that really allows us to pool and sort of amortize that cost across all these users, and then reinvest in improving the data, improving the infrastructure, improving the models. So, to kind of succinctly put it, better product, more users, more investment, and the flywheel keeps turning.
So it sounds like the future is going to be really exciting from what you said, right? And again, just comparing that to the macro backdrop, like as we look into 2025, I mean, we expect further rate cuts, a U.S. economy that refuses to turn lower. Now with the new president, and again on the risk side, we have high geopolitical uncertainty. We still have, unfortunately. Looking at all that perspective, right, and again comparing that against the growing learning process of the machine and everything that we've been doing, can you give us a sneak peek of what the future holds to our users? When I mean future, I say near future, right? Just like 1 year from now, what they can expect now.
Well, one of the things that's just very obviously true, even outside of what might be happening geopolitically, is that there's just so much energy and investment in AI and ML and that whole surface. And so our goal as Investing.com is to make sure that those continuously benefit our users as well. So as new products, new solutions become available, we're constantly making sure that those get worked into even everything from our AI models that back ProPicks AI, but also outside of the platform as well. So whether that's news, translations, wherever it might be. The second, which I'm super excited about, and we've been working a good part of this whole year on this to make sure that it's good and it's robust, is rolling out ProPicks AI to all of the localized editions and offering global coverage. So supporting markets that we haven't so far, like India, Canada, Turkey, where just millions and millions of our users reside, and making the product also valuable for them.
So did you hear that, guys? ProPix is coming to a local market near you. Stay tuned.
Absolutely, yeah. So in just the next few short months, we'll be rolling that out. We already have everything working internally. We've just been monitoring it with our local partners and making sure that the product is something that we can really stand behind.
Sounds super exciting. And do we have any plans of incorporating Gen AI into the mixture? And how would that even help?
Yeah, so leveraging improvements in machine language understanding has been a huge focus of actually our last 2 years. So Investing.com users probably already know this, but we've been rolling out much more coverage of news, translated much faster, more clearly. And so you've already seen a lot of those improvements over the last couple of years. But one of the ways that I'm especially excited about is what we've tried to do when building AI models is make sure that they remain explainable. And so when we train these models, there are techniques that we could use that would erode our ability to introspect how the AI model is making the decisions it's making, but those are just not as interesting to us. And so since we can actually understand more of the reasoning of how the AI models are arriving at the conclusions they're arriving, we can actually surface that to users, and we plan to do so over the next coming months as to in just easy to understand English explanations offered real time, and then for every buy and sell decision, you'll have much more context on what's actually happening under the hood in the models.
So, Andy, my phone has been buzzing nonstop since the start of this thing with users asking us questions. So I've selected a few ones, and just with the help of our marketing team, and let's see if we can get through them. Yeah, okay. So I'll start with Jeremy from the US. Okay, Jeremy's asking, your strategies seem to change frequently every month. How can investors maintain a consistent investment approach with such regular turnover?
Sure. So just to clarify the question a bit, so we've launched 6 strategies last year, and those are the same 6 strategies that are still available on the platform today. So the general criteria that governs each of those strategies hasn't changed across that time. What ends up happening is that at different points in time, there are different companies that offer better risk reward ratios. And so the model's entire objective is to really find a ranked list of companies that offer the best return for the lowest amount of risk. And so that's where you may see, say, in 1 month, a larger concentration in, say, energy companies if you're following something like the SP20 list, which is the S&P 500 companies, and a lower concentration of tech companies, or vice versa, right? In some months, there might be a higher percentage of IT companies and lower utility companies, for example.
Right. That's a great explanation. Thank you. So let me follow up with David from the UK. He's asking, that's something we kind of covered, but I think you can give them, more insight into how that works. So how can investors use ProPicks if they don't replicate the entire portfolio?
So we covered this a bit, as you alluded to. There are just a whole host of use cases that we've found users use ProPicks AI. But I think the number one is really ensuring that you use it as an idea generator, and then go on and use some of the other tools that we offer to also build confidence in the picks themselves. Because what we've also found is if people don't really understand or feel confident in any investment that they make, it's rarely ever just a straight line up. And so for best performance, it's really important to understand the types of investment decisions that you're making and then having a good amount of confidence and conviction behind them.
Right. So the next question is a really interesting one. It's kind of a philosophical question. if you will. So it comes from Mario from Spain. He's asking, as machine learned models improve and DI gets better all throughout, should we expect better returns in stocks?
Well, so I think what we hope to see, and this is it's a bit of a philosophical question. I don't think there's anyone with perfect 2020 insight into this question. But my personal hope is that as these models improve, capital in general across the world gets allocated more efficiently. And so when there are business leaders or entrepreneurs trying to start companies, in general, the good ones, the good ideas get funded more easily and more efficiently. And so how should that translate? I think the net effect of that is really better products are supported with more capital, which means the economy grows faster, and thus you see better returns overall.
Right. But a follow up from my end, and that doesn't come from a user, but should we expect more concentration though?
I'm not sure that So here, let me answer this question in two ways. Like what we have seen over the last couple of decades is a sort of a consolidation and concentration where so much of the returns have gone to some of the, say, largest 10 players in the S&P 500. But the other side of AI is that it can be democratizing, if you will, right? And so we hope to see smaller companies being able to achieve more, and as they grow bigger, list on exchanges, and then hopefully that translates as well to better stock returns.
Okay, perfect. So I got another one from Christopher from Germany, and it's not actually a question, more of a rant, but let me see. I see on the website that the performance is backtested. Anyone can backtest results. Flush. So he sent a little emoji here. And I got another question from Carlos from Spain, who's kind of asking the same question, but a little more politely. How does the backtesting process works, and how does it help, getting results?
Yeah, so I think one of the main things I'd love to convey is that as a subscription product, it's actually not that interesting to us to just get someone to pay for subscription. The most important key metric that we actually monitor internally is retention. And so if we put out a product that doesn't actually work, that doesn't actually help us at all, right? So our key metric internally is retention, which means that the product actually has to work. And so we take a lot of precautions internally, even when building these models, to make sure that they actually have generalized and work on companies that they have never seen before, right? Because all the future things that the model sees are companies that aren't available in the data set. And so we actually take away about 20% of the data set, and we ensure to backtest on that 20% only to initially validate that the model has generalized, that it can perform on data that it hasn't seen before we start rolling them into strategies.
Right. So I got a final question, if you still have the time, Andy. This one comes from Puneet from India. You mentioned that you're working on local ProPicks, right? ProPicks for local markets. But when do you expect that to come out? Do you have a timeline?
Love it. Yeah, so we expect to start rolling out different geographies as early as January of next year. So early in January, that's the date that's marked on the calendar. And then we gradually hope to not only introduce it to more markets, but also increase the depth within each market. So offer a greater variety of ProPicks, whether it's different sectors, whether it's different types of risk return profiles, and so on.
So thanks everyone for joining us today and for all the insightful questions. Before we wrap this up, I just want to leave everyone with a special gift for attending our webinar today. As a token of our appreciation, we're going to share now the full list of stocks from our Tech Titans strategy for November. Reminding everyone that Tech Titans is a strategy that beat the market by more than 45% since November till today. So make sure to get a good screenshot of this, as we're not going to show it for free again, by the way. Also, I'd like to remind everyone that the time to subscribe to Investing Pro is now. Our Black Friday sale is on with an up to 55% discount. Finally, I'd like to thank Andy for being here and for all the thoughtful explanation on how ProPicks works under the hood and everything else that you talked about. This has been truly enlightening, and I really appreciate your time, Andy.
Thanks, Thomas.
Hope to do this again next year, by the way.